Absolutely, Sonia. We've seen that global markets witnessed a sell-off after these protests erupted in China, but India emerged to be an outlier. Indian stocks gained and in fact went to a record high after these protests emerged. Let's go through the data in the global markets and then the Indian markets and why they're an outlier. The Shanghai index was down 0.75%, the Hong Kong index down 1.5%, Europe's FTSE 100 down 0.4%, Europe's stock 600 was also down 0.7%. But as I said, India turns out to be an outlier, and Sensex and Nifty touched record highs and markets gained over 0.3%. Sensex, in fact, gained for the fifth straight session. Sensex gained over 211 points and it ended at 62,505, while Nifty gained 50 points and ended at 18,562. Now, markets are up over 2% in the last 5 days. With this, the Indian markets are defying that global gloom trend that is seen in the Asian peers, and Indian markets are touching record highs. There are two major reasons. First, inflation is falling, and we saw that US inflation fell below expectations. In India, inflation is below 7%. So that is being taken as a sign that inflation might have peaked. So that is leading to a fall in the fears of sharp interest rate hikes. And those interest rate hikes were the very reason one of the primary reasons taking the markets down. So now that those fears have come down, the markets are witnessing a boost. Another important reason is that oil prices. China is one of the world's largest oil consumers. With the lockdown, there's a fear that the global demand for oil might go down. As lower demand pushes prices downwards too, Brent crude prices are down 3% today, down to $81 per barrel from $95 per barrel just last month. And India imports over 80% of its crude oil requirements, so falling oil prices are helping the Indian markets too. These reasons are contributing to the Indian markets defying that global downward trend.